Good afternoon, Jonathan Warren, Mortgage and Protection Advisor. I think of myself as a bit of an expert when it comes to finding first-time buyer mortgages for my clients. If you're a first-time buyer, you may have spent the past few years saving a deposit to help you get your first home. The next step is to find out how much you can borrow so you'll have a better idea of the house you can afford and the area that you can afford to buy in. As well as your deposit, you'll also need extra money to put towards fees like property searches, surveys, mortgage arrangement fees, broker fees, solicitor fees, stamp duty, home insurance, removal costs and so on. The amount you can get as a mortgage will be dependent on your annual salary, any bonus or overtime that you may receive, credit cards and loans, childcare costs, household bills and travel costs. You'll also be subject to credit referencing to make sure that you are a reliable borrower, and some specialist lenders will also work with credit repair customers. Lenders will have a maximum loan to value that they will offer you, LTV. This is the mortgage percentage compared to the cost of the house, and it may be a maximum of 95% or sometimes less. So if your house is being purchased for £100,000 and your maximum LTV from a lender is 95%, you'll need to have a £5,000 deposit plus any additional fees. Before you start viewing properties, it's worth meeting with a mortgage broker and completing a fact find so that they can advise you on which lender may offer you the best LTV, and they may provide you with a mortgage in principle. Some estate agents will require this before they'll let you make an offer on a house, or before they take the house that you want off of the market. Some lenders will run a hard search when you request a mortgage in principle, which leaves a mark on your credit file and it will affect your credit score. Other lenders will run a soft search which doesn't affect your credit score. And again, a mortgage broker is of value here to ensure that your credit file isn't damaged in the process. If you can't afford a mortgage or you don't have the deposit required to start on the property ladder, you can look at options of joint mortgages with a partner, a sibling or a parent. And together your joint income and deposit may be that little bit extra that you require. In 2018, for example, parents provided millions of pounds in gifted deposits for their children. And in our current economic climate, it's becoming more regular for first-time buyers to do this. Your parents may be able to help you with your deposit if they have savings, or if they have equity, the difference between the mortgage and their current house value. There's also a number of government schemes to help first-time buyers, such as the Help to Buy ISA, Help to Buy purchase schemes, shared ownership or shared equity options if you're finding that affordability is tight. Due to the amount of mortgage products available and the fact that lenders have different criteria for different types of buyer, it's quite unusual to see a comparison type website showing you different mortgage rates. And this is where I come into play. I'm a qualified mortgage and protection advisor, and I'll really make the difference for you. I'll be able to source mortgages from across the market specific to your circumstances, and I'll recommend the best solution for you and your family or your business when it comes to protection against loss of life, the effects of serious illness, income protection or business protection. I'll also be able to provide you with 5-star de facto buildings and contents insurance, so you can rest assured that in your new home you've got the best possible start for your journey. If you want to speak to me, I'm Jonathan Warren, Mortgage and Protection Advisor. Thank you.